Hi, everyone. Welcome. Hi, Crypto Fest 2021. Welcome to a panel on VC investing, where money is going. I'm Samantha Yap. I'm the founder of Yap Global. We're a PR agency specializing in blockchain, crypto, and DeFi projects. And I'm really excited to invite a great lineup of experts here who have probably spent the last year, investing in all sorts of things in the crypto space. So I'd like to, welcome Anil, who's a general partner at Fabric Ventures. Welcome, Anil. Tito, investment associate at Global Ventures, and Tim, the founder of YOLO Group, formerly Coin Gaming Group, and the general partner of YOLO Investments. Welcome, everyone. To begin with, it would be really great if each of you could kind of go around and share what you've been really focused on this year in the topic of investing and in your ventures and deals this year. So, Anil, how about we kick it off with you?
Absolutely. Delighted to be here. Thanks for having me. We have been focused primarily the first half of this year on actually getting established. Although we've been running as an investment vehicle since 2015, looking at the open web space, this is our first institutional fund that we closed this year. We're now the largest regulated, focused open web or Web 3.0 investment venture capital fund in Europe. And we got off the mark in April with our first close and have been investing in 6 or 7 companies already. The total portfolio of Fabric is a combined network value of over 100 billion and over 40 companies now. So we're a specialist firm in this sector, but cover infrastructure layer and some of the application layers such as gaming and DeFi.
Cool. All right. So we've got Fabric Ventures covering Web3, gaming, DeFi. Tim, what about you?
So YOLO Investments is what we're running. We're currently about 70 different investments across fintech, gambling, gaming, banking, and certainly play-to-earn type crypto ventures, as well as a lot of Bitcoin mining and other type things as well there. Currently about 350 million assets under management, and thoroughly enjoying trying to build a very nice ecosystem around our main B2C brands, being the sports betting stuff we're doing with crypto, but trying to work out how do we supplement and complement those brands and build around them, especially moving money around the world. So Lightning is probably the biggest thing we're looking at and investing into at the moment, the Lightning Network.
Cool. So like gaming, and interesting that you're also interested in like Lightning Network. And so are you also like developer tools or more infrastructure layer investments?
Look, it's interesting. It's on one side, it's stuff like we've built our own live chat. We've got our own accounting software. We're building that into our own banking infrastructure. We're invested in Nubank in Brazil and Curve in the UK, and looking at how do we connect everything together with the ultimate aim on how do we replace SWIFT within 3 to 5 years, and if we have enough endpoints around the world in the banking infrastructure, what services can we put on top of that on those financial rails? So there's a great company in the Philippines we're invested called Uploan, doing corporate lending, and just sort of using the treasury from some services to supplement or to use in a Filipino or a Middle Eastern or an Indian venture. It's hugely exciting to sort of create that network of what we're doing. But it's then you've got the play-to-earn stuff that whether it be Zrun or actually Infinity, and as that globally starts to spread out, how do we be involved there and then be the on-ramp, off-ramp, or invest into something we can be the on-ramp, off-ramp. So just connecting it all very nicely.
Yeah, cool. And Tito, what about you?
So I think I'm the balance here. So Tito here from Global Ventures. So we're a sector agnostic tech fund in emerging markets. So we have 39 investments across our portfolio, where we have offices in Dubai, in Nigeria, in Tunis, in Egypt, and Saudi Arabia. And I think we're thinking about what the next stage for crypto in emerging markets is. What are the new I would say, layers that are going to be built in terms of exchanges and bringing this into, underserved populations across emerging markets, and what are the use cases for crypto in Africa and in the GCC and Northern Africa as well.
Cool. So I guess let's kind of like take a step back and look at the state of crypto and the VC investments into crypto this year. I mean, 2021 has been it's a bull run. It's been a huge year with I guess cryptocurrency, Bitcoin price and Ethereum gaining all-time highs, which kind of determines the growth of the market. But then also this year with like DeFi protocols taking off, NFTs, DAOs, and then also like the play-to-earn gaming stuff with Axie, which I'm sure Fabric and Anil and Tim, you've been talking about. So about 17 billion in venture capital has been invested in crypto so far, dwarfing kind of the 3.7 billion that was invested in 2020. So that's kind of a huge growth. And so what are the other contributing factors aside from the surge in interest that we're currently observing right now in terms of like the growth of interest to the crypto space?
Well, I'll have a shot at this first. I think given that just we've had some recently regulated EFTs come out, be it in America or in Guernsey, I saw there was one recently, it's opening up more institutional awareness to the crypto space. And, as a function of that, then the VCs start thinking, well, actually, if that's now being, let's call it, properly regulated, perhaps this is an emerging space which we can get into, which is why you've gone from 3 billion up to 17 billion of investment. Back in the day, it was people who invested into exchanges and certain, let's call them layer one type things, whether it be the Coinbases or the Circles of the world. I think that's now moving forward as more ingenious solutions are coming out. And it's not really an ICO boom in that sense. It's more properly structured businesses with a clear target audience and a clear way to market and what they're going to do. That's where the interesting space, and then just volume of money will follow that, obviously.
Yeah, I would agree with that. It definitely has, 2018 was a retail speculation. I think this year has been driven significantly by institutions, albeit probably speculation still, but larger dollars. I think other elements of interest and driving interest have been the broader NFT and DeFi spaces. The question that I think those numbers you throw out give rise to is this a tulip boom? Clearly, the 2018 experience is not one that we want to repeat. And I think it's quite instructive that, if you look at the 17 and remove Bullish Global, which is frankly, the biggest deal at 10 billion this year, and a very strange and probably more of a controversial deal, I would say. The level that remains is quite similar to the 7 to 8 of 2018 billion, that is. So, my hope is that that's not a harbinger of repeat. I do think that, what balances that off is, as I mentioned, a more institutional adoption, a maturing ecosystem where people are seeing the blockchains now as platforms for ecosystems to evolve and for applications to be built on top of. But I do think it's cautious. We should be cautious about throwing large numbers out there. We need to be disciplined about valuations as well, so that we don't repeat, 2018 boom or even a Web 1 bust in 2001.
Yeah, I would agree with Tim and Anil. I think there's also the unsaid elephant in the room, which was COVID-19 happening and a lot of people sitting at home, and consumers taking the time that they would not usually have to understand how crypto works, right? Which then drives consumer usage of crypto and trading. And then there's a knock-on effect in the fact that it's almost a new layer of crypto where there's now use cases for most of the, like DeFi and blockchain itself. The use cases are now tangible. And it makes VC investments more de-risked in the sense that I'm not investing in a coin, I'm investing in a specific use case that I can see applicability and how to drive profits, right? And I think that's one of the other factors.
Yeah. Actually, on the point that Anil brought up in terms of being, disciplined and careful with the evaluations, I mean, this year, I guess due to the size of investments and just the money flowing in, and I don't know if it's also like in crypto as well, like new wealth being generated or kind of in token wealth. But working in the PR space, seed rounds and Series A round figures have almost kind of like tripled. Like it's not news anymore if you raise like a 500K seed round. Like if you're not raising like a bullish like multi-million-dollar seed, like it's not the next thing. So I do see that numbers are kind of a bit inflated. Do we think that it's just part of the year, or do you think it's part of it is that this is really where the growth and innovation is, and that's why these?
I think on this one, it's like you see some of the A16Z and SoftBanks and headlines coming in, and they're doing some very big investments and raises. The sequential people coming to the market with their ones are now trying to benchmark it on those types of whether it be Axie or ZRun or whatnot. It just as a specific vertical and example. Everyone thinks with every new NFT game, they can all command the same type of valuation and raise as well. And I always go up to the question, what are you going to do with the money? You know, you're raising $7.5 million on 100 million pre. What are you actually going to do with it? And do you really need that much? But maybe people are following from precedent that, you know, they did it, so we want to rate, we believe we're worth that much as well. So I do believe there's a bit of hot air in there somewhere. But, you know, as VCs, we've got to try and find the sweet spot of what we think the valuation is and what the founders think their valuation, and come to an agreement.
Yeah, there's always similar dynamics, and it's not just in crypto. You know, I think the gentlemen there are both fintech investors. I used to run PayPal Ventures in Europe, so I mean, come from the fintech game as well. You know, we see similar dynamics which have moved fintech from being a verticalist focused fund to more a generalist VC investment sector, and we're seeing larger and larger funds such as Tiger move into fintech. And I think some of the fintech deals have also, you know, ballooned in the same manner. But even so, there's clearly a significant bid premium versus all VC deals in the crypto space. And a bit of that is not just the demand supply of capital coming in, but you know, from the traditional investors, but also the crypto native players. So it's quite interesting to see how many of the layer ones and their treasuries, whether it's Near, Dapper, Coinbase Ventures, you know, are all incredibly active investors, leveraging, you know, the money they've raised through their own tokens to spread the wealth, so to speak, and build the ecosystems. That also increases the supply of capital for crypto-specific projects. So I think in particular in token issuances, you know, there are some heady prices to be paid. But I think project teams need to balance that out, because, you know, they're well aware of, you know, the incentives to stakeholders need to be balanced with building a long-term virtuous circle. And if they price that incorrectly, the attractions and the incentives are not going to be there.
Interesting. You touched on like how you were in you know, fintech VC investments as well, and we're starting to also see, so talk about money flowing in, we're starting to also see traditional VC firms, or rather just more general VC firms, look into crypto, to putting some of their money into crypto. Can any of you talk about the move and the interest that they've been, you know, seeing and encouraging them to move into the space?
So, I mean, being the resident traditional VC, I'll try and take this one. I think for us, it's more looking at specific use cases, taking emerging markets. There's, you know, decentralized finance. There is, remittances that you can do with crypto, where you're dropping the prices of remittances in Africa from anywhere between 10 and 20% to below 5%. So we're looking at specific use cases that we understand. It has to be less speculative because we have obligations to our investors not to, go into a coin offering that we don't know if it's. We might as well be investing in stocks, right? But then we're looking at specific use cases, and we know that the tide and the tailwinds are pushing that way. But we want to back the best founders building the best products. And eventually, because of the use cases make things more efficient, it's just one tool in the I would say in the army Swiss knife of a tech builder or a tech entrepreneur.
Yeah, I'd agree with that. I think there's 3 or 4 dynamics playing in. One is clearly some of these use cases, as Tito just said, they recognize and the solution, whether it's delivered through a blockchain solution or other, that's here or there. So those are clearly opportunities. I think also the interfaces between traditional and blockchain worlds are graying, and whether that's areas like compliance, taxation, payments, gaming, which I'm sure Tim will speak about. I guess capital markets, brokerage, analytics. The whole B2B as a service in fintech is also appearing in crypto. The expansion of neobanking into crypto, remittances, on and off ramping. There's part of payments. So these are all sort of pain points, but also the areas which span both traditional world and blockchain world. I think their VCs, generalist VCs, also feel more comfortable because they recognize that it's an extension of what they've already been investing in. So that's number 2. And I think number 3 is probably their own LPs are becoming more interested in this as well. I mean, frankly,
and
when
why?
you see...
Why?
Well, I mean, we spoke about earlier the shift of institutional capital into this, and maybe that's the trading firms and things like that, but it's also the larger banks, the Fidelities and the BlackRocks, and when BlackRock adds cryptocurrencies to their balance sheet, it sparks interest among the wider financial community, financial advisors, and downstream investors begin to explore ways to gain exposure in their own ways, their specialist ways, whether it's venture capital or liquid hedge funds to the market. So, I mean, it's interesting that I think the questions from LPs, maybe not pension funds yet, but certainly other financial asset managers, has gone from why should I invest in this to sort of how do I solve for this? What's the custody? What's the setup? To now being, what are the actual assets I should have? And they may put pressure on the general partner level to do something here. And then I think the 4th thing is probably just a little bit of fear of missing out, right? I mean, at the end of the day, there are unicorns that have been created very quickly, whether it's Coinbase or Axie, you name it. Success breeds success. Fear of missing the next one. And that all those 4 things combine in a cauldron to make more generalist VCs interested in this. I think they're also aware of their own existence going forward. It's interesting to see how Andreessen got formed in the late 2000s, 2000, what was it, 9 or something, in the middle of the cloud computing era. That was a new firm that got formed in that space. And, just as we believe at Fabric, new specialist firms will get formed at this stage. The traditional generalist funds, they need to stay relevant. And so they need to adapt.
Yeah, I want to talk about that actually. And one of your points you brought up, Anil, about the how do I do this? Because I think there's been, you've also seen the emergence of token native funds, and I guess I think Fabric Ventures, you've got your Web3 kind of fund, like native fund, but and I have heard a few instances where traditional VCs have wanted to get in on some deals, but they don't have the right infrastructure yet because they have to go set up another entity in Luxembourg with the right infrastructure to hold tokens. So are we seeing? So how are we seeing this transition of traditional VCs realizing that they probably need to have some infrastructure to get in on tokens? Because right now a lot of deals are done with Web3 native.
I think the interesting one here is where we may have initially started with a heads of terms and a SPA and a SHA and whatnot. Now we're getting a safe note that's saying, please input your Ethereum address for your $500,000 you want to get in this token. Now, most traditional VCs go, hang on, what's an Ethereum address and how does this work and is it safe and what's going on? I think with the explosion of Fireblocks and Silvergate and the likes of bringing more secure ways of handling money, it gives that peace of mind to more traditionalist financiers that they're not just carrying around a Tracer and carrying around 20 million on a Tracer and hoping for the best, not knowing how it works. I think on the other point there, when maybe the children or the kids or the niece or nephew saying, oh, look at my artwork on OpenSea or look at my virtual horse on OpenSea, and these older generation, and I'm being a little bit generous, but the more traditional VCs going, hang on, what is OpenSea and or what is So Rare or what is Dapper, and there's a whole new discovery. But when you've got this sort of ground up movement of people talking about it, we especially should be at the forefront of the emerging markets and how to be a part of that. So I think people need to get in there and do their research and get amongst it very, very quickly, because it may only be for a couple of years or maybe not the next thing after this, but certainly it's better to be at the forefront and on top of it straight away.
Mm-hmm.
Yeah, I think for us it's about, so we have an investment in a great company called People. They're blockchain native, so they've built everything themselves. In the financial services platform, and they have a multi-digital currency wallet and the like, right? And we had to do the work, right? I think traditional VCs just have to do the work to understand what they're investing in, and that is just something that has to be done. Because if you want exposure, you have to do the work, and I think that's something that we pride ourselves at Global Ventures is we do the work to understand markets. If we've never been in one, we do the work to understand it before we put any money in there.
Mm-hmm.
But. So I think there's a little bit more to it than that. I agree that there's the standard infrastructure that one needs to consider in moving into tokens, such as custody that Tim mentioned, and clearly taxation is a big one on behalf of their LPs. So how are tokens taxed is different jurisdiction to jurisdiction, which doesn't help. At the moment. So, those sort of operational infrastructure components are needed, which is why different traditional firms have taken a different approach. Some like Andreas and have actually gone out and spent the time and resources to create A60Z crypto. Others are, only doing equity deals as part of their existing fund. And others are relying on the GPs of the fund to take private stakes. We have a few GPs in our fund that are learning and getting insights, if you like. So they're doing different ways. But if you are going the whole hog, if you like, into tokens, apart from those operational infrastructure aspects, to Tito's point, the diligence and the the sort of portfolio value proposition that you then have on behalf of your obligation to your companies, your portfolio companies, those are radically different versus traditional equity deals. So VCs really need to understand what staking is all about, what yield farming is all about, how liquidity pools work, the risks of pump and dump, rug pulls, whether a project has done a smart contract audit, how Compound and Uniswap work, et cetera, et cetera. So if they're really going to manage the tokens and do diligence and then help companies in actually generating that virtuous circle of total token value and being a good stakeholder in the project. They need to understand all those things downstream as well as upfront before they do the deal. That's a whole new skill set. And so I think actually a lot of generous VCs say, we want to do tokens too. We'll solve the kind of custody and the taxation thing. They need to think about the diligence and the downstream solutions for their portfolio companies before they do that.
Yep.
Mm-hmm. Cool. Well, switching gears a little bit, let's talk about like some interesting investments. So, what are some interesting and controversial, perhaps, VC investments in the space this year? I guess I don't know if you want to name names, but
one I found interesting was the So Rare, and all credit to them, but at a valuation of 4.2 billion, I don't know how it's worked out. But if they can get people investing, which they have, maybe I'm not the smartest person in the room. So I don't know. I think.
Well, we can have a sidebar on that, by the way, Tim, because we're lucky investors in So Rare from earlier rounds. So.
But from earlier rounds, 100% agree, and I think there's some people who have done very nicely. I'm worried that how big a market cap, if Nubank, for instance, IPO at 55 billion, yeah, I don't know. There are some inflated valuations out there, and I think it's a hot market is probably the best way to put it.
Yeah. Tito, you were smiling there. Did you want to say something about that?
No. I just found it interesting that we have two people on a panel, that one that doesn't understand the valuation and one that's happy about the valuation. I found it very interesting.
Well, I had been as Anil, I'd be very, very happy with the valuation. Please don't be wrong.
No, it's great to see. It's great to see.
Is there any other investments that anyone wants to say is like interesting, controversial, new?
Yeah. Well, there's loads in this industry. I don't know where to begin. I mean, let me start on the more positive note. I mean, clearly we're delighted about So Rare, but I mean, I think if I was to abstract away from specific companies when talking about interesting, I'm very intrigued with the whole streaming or payments sector. So I'm a little biased because, I come from a payments company in the background, and yes, we did do an investment in Superfluid.finance, but I think the whole notion of you're sitting there, you're using your phone somewhere, you're playing a game, and the points you earn can be streamed real time to your wallet. Or if you're waiting for payday, you can be paid by the hour or the second, frankly. Or if you're a content creator, you can be paid in real time while someone is consuming my content. Those constructs cannot exist in traditional rails because we live in, the traditional payment rails can't cope with real time. And so we have the ability to do these new use cases and completely change the way payments is looked at, almost making payments like the media industry was disrupted with streaming itself, which is why they call it streaming payments. So that's a big area that interests me, and the use cases that may open up from that. I also find thinking a little about ecosystems, I think it's interesting that that we can find companies, but I do think we need to do a lot more on educating people how blockchain works, talent development, coding, and getting more businesses to accept crypto, because all of these interesting opportunities will always just be niche unless we help expand the pie.
Mm-hmm. Interesting. Tito, anything interesting you've noticed this year?
Well, I have noticed a bunch of stuff, but I think recently, I think it's still confidential. They haven't announced yet, but there's a big US VC about to do a multi-million-dollar deal into an emerging market crypto exchange that I think will give a lot of backing and a lot of, I would say, gravitas to what people are building in emerging markets. I'm really excited for that announcement and what that does for the ecosystem. And I think
pre-announce it here, Tito.
Pardon?
Pre-announce it here.
No.
I'm not sure I can
you don't
do that.
have to.
But I think once it's announced, everyone's going to.
Yeah.
Yeah, I think that's probably a fair point. Since we are on a show put forward from Africa, I agree with Tito that there are some highly interesting use cases for blockchain in Africa. I don't know if that's what we want to talk about right now.
Yeah, let's get into it. What would you like? Yeah.
I mean, Tito is the expert really, and we do rely on working closely with investors who are on the ground. But it's quite clearly, I think, my belief is that Africa are showing us what actually the real use case potentials are for in daily use case potentials are for crypto and Bitcoin. They're solving real pain points, not just speculation driven. Anything from moving money across borders, anything from protecting, building a savings pot that is protected against inflation, anything from allowing a business that is buying stuff from China to actually pay in real pay for those goods and avoid all the hard currency caps that exist in fiat. All sorts of problems they're solving, and I do think that that's a super exciting space to see, and it's no surprise that Africa remains one of the high growth areas for crypto, and it's much like they skipped the fixed line telecoms boom. I'm kind of wondering if we could see an analogy there.
I mean, I think Anil has hit the nail on the head there. I think the use cases for Africa is going to blow the world away, because I think with mobile penetration in Africa, we did so many leapfrogs on how to send money and how to use money, that when you layer on crypto, I think it's going to be super interesting. You're creating real impact that is like visible and you can see, and you're creating a lift in societies and organizing the offline. And I think I'm really waiting for what that is. I think there's two parts of this. There's accessibility and applicability of crypto. I think we're still in the stage where, where a lot of people are focused on building exchanges and making sure that transfer of crypto is possible. And applicability is coming online right now. And I think once those applications come online and, you're remitting, like remittance right now costs 10-15% of the transfer value, and it takes 3-4 days. With crypto, you could do it in a couple of seconds, right? And for less than 5% of the transfer value. I mean, that is significant impact you're making. And it's just amazing what can be done.
But then I suppose the question here is then, where are the government regulations up to handle the on-ramps, off-ramps, the KYC, the monetary control, the monetary policies in those 30, 40 different countries or nation states within the African continent? Where is it up to? Is it a stable coin which is needed? Is it the Naira, which is coming out at the moment on BITT?
Yeah.
We're really close to something happening. We've got a lot of pitch decks coming through on fintech startups, so we believe there's a good possibility there at the moment. But I completely agree. It is the use case, especially using that mobile money, and coming back to how do we get that whole ecosystem of farmer, shopkeeper, teacher, very simply speaking, how do we get that economy running around in a circle using crypto without the need to come off to a paper-based currency?
Yeah, I think earlier in the year, the Nigerian government kind of banned banks from using crypto, so something of the sort. And but now they just released the eNaira, which is meant to be our CBDC, so our central bank digital currency. It has some mixed reviews right now. It's only just launched, so I think they need some tweaking. But I think what banning it, then launching your own cryptocurrency says is, look, it's not that I don't want this to happen. I just have to figure out how I get involved, right? So I think the regulation isn't. I get involved, control, get a fee at least of every transaction. You know how it goes. It depends what they're doing. I can't speak for them, but I think the winds are blowing in favor of crypto, and they want to just be involved. I think it takes the ecosystem saying, look, this is how you guys can be involved and effectively without stopping this, and we can all make money this way. And I think it's harder in Africa because lobbying is a bit more, less open and less transparent. But I think the tailwinds are still in the favor of crypto, in my opinion.
Yeah, I think there might be something there about how, because we've talked about fintech and we talked about like the traditional VC world and the fintech world, and then now crypto and crypto, native Web3 native kind of like protocols are like running kind of on their own without like any kind of so basically there's the crypto native side and then there's the fintech side, and I think it would be, are we seeing these two worlds kind of also coming up against each other because, say take the play to earn Axie Infinity kind of example, you're having people kind of be onboarded onto crypto without even having a bank account. So is that something to also take note of with emerging markets where you can like have stablecoin currencies create like a wallet without actually needing to go to a bank account? But then, there comes Tim's question on how do you bridge that with real world, like, still need to pay for groceries and pay for rent. So, what do you see that going?
To the extent there, like, we look at Axie and what YGG are doing, especially. I don't know if Africa has opened up or Latin America has opened up. I know YGG are certainly exploring different areas, but is this a brand new economy which allows the people who unfortunately do earn less than $10 a day or $1 a day an opportunity to get ahead and by far surpass the average monthly wages? Is this the next sort of good thing for Africa? And then is it introducing people to crypto and stimulating a new economy, which will then have products and services around that economy, which is where we can come in and help invest into those and stimulate it even further? So.
Yeah, I'd echo that. I mean, again, we're lucky to be early investors in Axie and YGG. We're co-investing with them in Latin America right now. So, that is spreading out, and Africa is on their agenda too. And I do think that the use cases in all of these markets are very different from the Western European or US speculation type plays. So, people generally want to off-ramp to actually spend the money, as Tim, you correctly said. And, that is either solved through, regulatory environments that understand that this is a critical part of adding to the economy, and can, put the appropriate compliance and AML checks in. Clearly, I'm not ever suggesting otherwise. Or frankly, if they don't, like in Nigeria, they stick their head in the sand. You just saw what happened to the P2P market in Nigeria. I mean, frankly, I believe that crypto is decentralized, and so people will figure it out, and they have done. And in Nigeria is that I think if not the top P2P market in the world, it's certainly close. So how do the role of the regulators? They can be obstructive, but they can really drive their general economy if they're inclusive, rather than trying to force people down a path, either blocking it or trying to get them to adopt an e-Naira, which I just don't see that will pan out, at least for the broader retail market, because the trust in the government is what matters, and that trust is gone in Nigeria.
Tito, how do you see this all unfolding, given you're on the ground?
I'm no politician or regulator, so I can't really speak. I think what Anil is saying is right. The government passed the law and trading has tripled or something. I don't know what the numbers are, but peer-to-peer is huge. I think the guys from Pax will say they say 50% of their wallets are Nigerian, right? You're not going to stop people from doing something that's better for them, right? The currency is devalued maybe 50, 60% on the black market this year, and Bitcoin has gone up, right? So if I was holding Bitcoin instead of Naira, I'd be the happiest man in the world. So once you see that, you're not going to stop me from finding how to buy Bitcoin, is the point he's making, right? How they get involved is really up to them. I think they will get involved. They have to find a stable and profitable way for the entire ecosystem to get involved. And I think they'll figure that out eventually, because eventually we will. And I just want to be on the good side of that and back the right kind of companies. And that's my obligation, to make sure I'm playing the game and I'm playing on the right side, right? And I think something an application I think at Global Ventures, what we always try to think about, look, you can do good and do good business, right? And I think an application that no one really speaks about is the social impact part of this. The transparency that crypto brings could be revolutionary for things like donations, for carbon offsets, and how you trade those and stuff like that, which is like a big deal in Africa, right? Even there's a bit transparency in how it's being moved, and I think the social impact parts of crypto is something that it would be interesting to see unfold in Africa as well.
Certainly. And what about like Anil and Tim? Are you also looking at, I guess, you're obviously looking at investments globally, but like, do you also look at like emerging markets as well in other parts of the world?
One investment we've just made recently, sorry, Anil, we've just made recently, it's a company called eAgronome, and it's a farming application out of Estonia, but what they're now doing, they're teaching farmers what to plant, where to plant. That's all wonderful. Now they're building up the carbon offsets and then building a marketplace and bringing the verification of that and then selling those carbon credits elsewhere, basically through some form of NFT type concept. And that really, really interests me because it's moving away from that centralized repository or verification of something and then goes to a global market. If there is a decentralized exchange of carbon credits and that people can buy and sell and it can do good for the world, I think that's a really, really cool project. So it's one that we're really happy to be involved in, and it can spread across borders, which is the most important thing.
Cool, that sounds very interesting. Anil?
Yeah, just very briefly, I think I mentioned this before. We are a European fund. We're backed by the European Investment Bank, somewhat ironically, the central organization backing us to decentralize the world. But and so we have some obligations being, on the ground in Europe to identify great teams across Europe. But we are a global investor, and this industry is global. We've done Axie YGG in Philippines, in Vietnam, I guess. We're doing a deal in Brazil. We did a small deal in Yellow Card in Africa, and we're looking at a lot more. So I'm excited about those use cases.
That's certainly very exciting. I actually really like how the crypto and like just investing into Web3, it is so global that it really you're not like tied down to anything regionally. So just some closing points. I guess three of you are, sound like you're really deep in the weeds of like investing in this space, and you're already invested in some really interesting deals. If we could kind of offer some maybe predictions or advice for the next year, but also the next 5 years, like what do you think is going to become kind of like the next trend or a trend that's already, gaining interest now that's going to kind of stay for the long term? Quick parting thoughts.
For me, and I don't know if this is possible or it's good or it's bad or it's silly, but with Facebook changing the name to Meta yesterday and looking at how they're going to use DM properly with 1 billion daily active users, imagine that. I'm sorry, might be worth a speculative bet, one would say, but who knows?
That's certainly scary. Anil?
I think we are just at the early cusp of the point we mentioned earlier about the larger pools of capital and traditional asset managers entering into this space, and there are so many problems, I guess, in the periphery that to solve. They dip their toes in centralized exchanges. You've got on and off ramps, tax compliance, custody, crypto as a service, all sorts of institutional solutions, cross-border payments, analytics, infrastructure, dev tools, you name it. Lots of areas that I think traditional asset managers in the venture capital space can dip their toes into to actually make this industry less about the niche crypto whales that operate today and more mass market, which will benefit us all.
Cool, thank you for that. Tito?
I can't really. I don't want to speculate or anything, but I would say in emerging markets, I can
Almost there, Tito. Sorry, you're back now.
Yeah, I would say in the near term, just building the initial infrastructure for crypto and emerging doing remittances to China. And just building those initial rails, that infrastructure is going to be invaluable when this does blow up in Africa. And I think I would be looking at that in the near term, just building those initial rails and those infrastructures.
That totally makes a lot of sense. Well, Anil, Tito, Tim, thank you so much for your time. It's really great discussion about VC investing in crypto, where money is going, and let's see where we go from here. Thank you guys for joining.
Thanks so much for the time.
All right.
Thanks, okay. Bye.